Nitin Raheja also joining us this afternoon. Nitin, what a day. It's been interesting. Big announcements, power outage, and whatnot. Okay, markets inching towards 12,000. It's clearly going to be all about IT this week. What are you anticipating from some of those big numbers?
So I think very clearly the initial numbers that have come from TCS have sort of given a perspective in terms of what we should expect from IT. I think this whole COVID episode and work from home and all has actually only accelerated this whole process of digitizing, towards the digital economy and the move towards the clouds. So what we're really seeing is that the larger companies are going out there and trying to get large deals as far as infrastructure space is concerned, the cloud space is concerned. The smaller companies, the mid-cap companies are, actively scouting out for deals to help a lot of companies to actually move to the cloud and digitize their operations even faster. So I think IT seems to be in a good space. Having said that, there has been a fair run-up in the stocks. In fact, all of them are trading at close to multi-year highs of their recent past. So I think the scope for disappointment is very low. I do believe that this is a story that will probably has legs and has some way to run. But having said that, in the short term, I think most of them are already pricing this story in for their immediate near term.
Just going to go to Mubina for a moment to analyze what went wrong with the Vedanta delisting. Mubina?
It's official. Vedanta Limited is not going to be able to go through with the delisting. They have not received the sufficient number of shares required to go through with the delisting, which in Vedanta's case was 134 crore shares. The company received only 125 crore confirmed bids. Around 12 crore shares continue to remain in the unconfirmed category. Some of the bankers to the entire book also told us that they have asked for an extension from SEBI, but Vedanta Resources has said that this delisting is deemed to have failed. So it looks like the companies will be going back to the drawing boards to figure out what's the next step. Remember, Vedanta does have roughly about $3 billion as well lying with it that it had borrowed for the purpose of this delisting. Plus, Vedanta Resources had taken intercorporate loans as well instead of, sort of taking dividends from the company. So even CLSA, in fact, says that now capital allocation is really going to be key. How are they going to utilize the money? If it's going to be sort of distributed to the shareholders in the form of more dividend, then of course it's a positive for minority investors. There is a possibility that Mr. Anil Agarwal may conduct a buyback as well to raise his stake, perhaps, so that his next attempt of delisting will go through. But reports say that today there's a board meeting between Vedanta Resources, Vedanta Limited to figure out the next step of action. CLSA has cut the target price meantime to 118. They are anticipating weakness in the share price for some time now. Dividend payout, intercorporate loans, debt reduction as well, they are saying is extremely important. And all of this really comes under the umbrella of how Vedanta is going to allocate capital from now on.
Nitin, this is turning out to be a little tricky, A, for minority investors in the company, and also if one has bid for Vedanta delisting, because one's shares are under the bid, hence cannot be sold today, A. Bankers are saying that shares will be back into your demat account only on Tuesday evening, that's tomorrow evening, hence you can sell shares only best by tomorrow or pay in by Wednesday.
So I think that is a little bit of a technical part. If you ask me, from anecdotal evidence with a few investors that we work with, some of them have already received credit in their accounts even today as such. But I think what is really of interest to me is that what is the definition of unconfirmed bids? I really fail to understand that, because when you have people who are bidding and online, you have bids going in. what is this unconfirmed bids, and then how is this bids being withdrawn at the last moment? Because even till the middle of the day, I remember seeing an interview of Mr. Agarwal coming and talking about having received over 90% of what they were looking for. So this is something really very, very strange, that has happened, and I think this actually warrants a look through by SEBI in terms of what has really happened. You've had bids going up all the way up to 320, which LIC has bid. And if you really saw the screen the other day, it was really weird. There was at the upper end, there were some bids which were made even at prices of ridiculous prices of 1 lakh of rupees and so on and so forth, which were of course withdrawn. So it calls into question the whole process. It calls into question the whole intention behind this on the part of the management, the kind of write-offs that were done in the books just prior to this. So this whole thing does not really have a very good ring to it. And more so, minority shareholders have been clearly shortchanged in the whole process. And, to add to that, there was a lot of broking companies were recommending to their HNI investors based on reports that had come out by, shareholder oriented agencies to buy the stock and submit at higher bids. So I'm sure you're going to see this short-term pressure with a lot of those people who are essentially playing this delisting game now getting out. However, I think that there is value in the stock. The commodity cycle is being looked upon as going through a virtuous upcycle, more so aluminium. That is almost 50-60% plus of Vedanta's business, which today, mind you, with the kind of debt that it sits on, represents almost no value. But I think you will start seeing that happen. But I would like to wait, because today the company is having a meeting to discuss with the management in terms of the promoters are meeting the management to discuss what they're going to come up with. But the whole modality has really left a very, very sour taste in the mouth.
Sure. Okay, two new listings as well today, and I want to quickly take stock of both, Mazgaon and the other one being UTI AMC. Let's quickly bring up the intraday graphs of both and tell you how they are currently panning out, because Mazgaon, sure enough, listed on expected lines with a bit of a premium to its issue price, and let's see where it's currently holding at. And UTI AMC as well will just come up for you on your screens. Remember, there was a lot of chatter about Mazgaon as to how this is going to be a strong one. Even right now, as I speak, it's holding on to that 20% premium to its issue price. 172 thereabouts is where the stock price is listed, if I recall correctly, at about 30% premium to its issue price. The grey market premium itself was indicating that this is going to be a solid start, and UTI AMC should be on your screens next. That's currently lower though by about 10.25%. Nitin, how are you reading into this new paper entering into the market, and especially Mazgaon today, because this is a specialized company from the PSU stable in that sense, which gives you exposure to defense?
Right. So I think you're right. Mazgaon is from a valuation perspective, it came very attractively priced. So most people the retail investors, it's been a great experience for them. Let me give you another perspective on Mazgaon also. When I talk to some of these IPO funding NBFCs, this was a very heavily leveraged issue. And as you know, in the HNI category, it was over 600 times oversubscribed. So the cost that it came to for most investors, the finance cost was close to 160, 170. So most investors who have invested in Mazgaon, the HNI investors on leverage funding, have a cost of almost 310. I don't see that price coming at all in the near term. So I won't be surprised if you actually will see short-term pressure. And you're already seeing that, because in the morning it listed at 215 and then it has come down. So this is all the leverage investors sort of selling out and going out of the market. The stock was valued very attractively. So I think once you see the selling off, you might yet see Mazgaon claw back and go back up again as such. As far as UTI AMC is concerned, I mean, I think clearly it is now trading at a sizable discount. The concern for most investors as far as UTI was concerned was the fact that the equity part of the business was getting smaller and they were not getting sufficient inflows coming out there. So hence there was a valuation discount. But I'm pretty much sure that even out there was funding. So I'm sure because people, what normally happens is when you have a IPO which has been funded and the price is much lower than what the investors expect, you have all the fund-based investors selling out initially. So you're seeing that pressure probably also plays role out there. And I believe that once that settles, the dust settles down, you will start seeing UTIMC also starting to come back and at least start reflecting value.
In fact, I'm going to quickly bring up, the management bites as well. We spoke with both after the listing, and here's what both Mazga as well as UTI AMC managements had to tell us about where are the company prospects going forward.
It's indeed a matter of great honor, pride, and privilege for me to present the credential of this company, Majgaon Dock Shipbuilders Limited, immediately after the listing of IPO of Majgaon Dock Shipbuilders Limited. As you are aware, Majgaon Dock Shipbuilders Limited is the oldest shipyard in India, with inception in 1774, incorporated in 1934, and taken over by the Government of India in 1960. MDL is the only shipyard in India to have built destroyers and two different types of conventional submarines for the Indian Navy, and is also one of the unique shipyards in the world who handles such a diverse range of products. From the time it has been taken over by the Government of India in 1960, MDL has built 796 vessels, including 25 capital warships and 4 submarines for the Indian Navy. The first warship built by MDL was commissioned into the Indian Navy way back in 1972, and the first submarine in 1992, now which demonstrates our resolve towards Atmanirbhar Bharat and Make in India initiative of the government. In commercial sector, we have also built 631 vessels comprising cargo ships, supply vessels, water tankers, tugs, dredgers, fishing trawlers, barges, etc. We have also built 63 number offshore platforms, 3 process platforms, and 2 jack-up rigs. And out of all these products which have just now rolled out, we have also exported 243 vessels to Mexico, France, UK, Iran, Yemen, Mozambique, etc.
First of all, the listing price is only or issue price is only the starting point of our marathon or journey. But this journey does not have any end line. The investor has come in considering the opportunity in our industry and considering the management and the potential strength which UTI has. And these are the equity investment. It is not fair on my part to speak on a specific price, but the industry is poised to grow. UTI has all its lever rightly placed to capture any growth opportunity. That will help us to enhance value to all of us, for all our shareholders, our investors, our stakeholders, and our employees. I'm quite confident the industry will grow, and with the growth of industry, we will do everything possible to ensure that UTI continues to grow and capture the growth opportunity.
All right. Okay, lots of action there today. Now, just taking a look at the screen and perhaps, some of the other stocks that are catching our eye today. Nitin, we've been trying to talk about, expectations given where we're currently trading, earnings around the corner, data has been intact. Some of the auto names, for example, or retail names have been in focus once again on the back of positive momentum. NBFCs as well in light of that. Are you also expecting things to only improve from here on? And in light of that, would you continue to buy in at these levels?
So I think very clearly, if you see the last few months, the manufacturing PMI has shown a fairly strong growth. as such, with the numbers for September being close to 56.8 or something. Now, my own hypothesis is that in the closed lockdown period, there was a lot of channel destocking that happened, and now we are seeing once again channel stocking happening. Manufacturing companies are ramping up production in anticipation of the festival demand that will take place. On the other side, you see the services PMI is nowhere close to where it was in Feb. So clearly, and even today's measures on the LTA by the finance minister are all measures to try and improve consumer demand or retail demand, and so on and so forth. Now, you will definitely see in this current September quarter, the manufacturing companies deliver strong, results. But if you do not see retail and consumer demand flow through, especially in these next 2 months, which is October and November, you might once again see manufacturing PMI starting to come off, and so on and so forth. So I wouldn't say that we are out of the woods. Clearly, I think right now there is optimism on the ground. Also, with the opening up of various other service sectors such as hospitality, which includes hotels, restaurants, even cinema theaters and malls, you will see the services PMI also starting to show some signs. But I think if you ask me, I think it's early days. I think only post October, November will we really see where the situation stands. But taking a little longer term view, I think clearly we have seen the worst. The momentum is going to start now. Whether that momentum slows down in a particular quarter and then again picks up later on is what we will need to see. Because if you go by most data that is being put out by rating agencies, they are not talking till 2023, the economy getting back to the path that it was on when we went into the lockdown. So I think, yes, the longer term momentum is upwards with maybe few blips here and there every quarter.
Sure. All right.